General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, there it goes. It wasn't recording at first. Could have sworn I just heard Maria. It's an undeniable bass. Today's Wednesday, so tomorrow is Chop, but we have NFP Friday, so low probability days for the next 2 days. Tomorrow's unemployment. I don't ever have that screen grabber just sitting ready for me. There we go. Unemployment, I expect to come in good. We have all good news. $8:30 news tomorrow, which I like, but I know we can hold. 8:30 news. Unemployment. It's not a week I just push. NFP week is not. It's not my favorite week. Week 2, week 3. That's when I like to get in there and put risk on. Week 1, week 4, and the dreaded week 5 is not really a put risk on environment for me. This is it's almost pointless, but you just never know. Something might change. It might bring to my attention a news drop I missed or something. If this is just flip flop one crazy day. 95% no change. For July 8th for June 18th. It's like looking at earnings. It's just like a good habit. It's news as well. A lot of you just don't know how many times the news can, oh, there was news. You just don't want to be, You can prevent this stuff just by looking at it. 69%, no change. This went down. Okay. So let's see if it was it good news or bad news. We got red everywhere. Okay. Bad news. Chance of keeping the rates the same goes down. The market wants rate cuts. We'll see when we get to the dollar. Earnings. Oh, tomorrow's ABGO. That's not called ABGO. It's easier to remember the ticker than it is to the name, especially if you look at like stock fees and stuff. You'll be looking for Broadcom and be like, what's the ticker? Broadcom, what number is this? In the top 10. Slick charts. BlackRock ETF. Broadcom, number 6. Number 6 in the NASDAQ. Reports earnings tomorrow. Aftermarket. Dollar on the daily. My good friend, the dollar. Just chopping away. Bad news, bad for the dollar. Yesterday, good news, good for the dollar. Unemployment. This is that time flip I put on this a minute ago. This is a day. So will we see some action up here? This is where I'm looking now. I want to see this addressed. Maybe this down candle swing high. Yeah, I'm bearish, but I wanted to take care of this first. Retrace to an imbalance, then fall. I'm looking for a retracement to imbalance before we fall. Today. So we broke over C this week. We also broke over this. Did we knock out this price? So we got one here. We actually failed to expand above that. That's interesting. My alert was here for my buy. Okay, that's a daily high. I still want to see this tagged. Previous day's high, swept it, not closing above this. No taking it as high either. Choppy day. with only a slight push up. Did not hit target. Let's go to weekly chart. This is what month 6 of just doing one ticker, and I have to say it's a lot better because last year I don't know if y'all was looking last year, but last year I was kind of doing this, and I was looking at a lot more. But if you in the Telegram, you will see that I've been studying. That's all I do. Higher still makes sense from the weekly chart. Because we did not hit any weekly outside liquidity. Yeah. We didn't close above this daily candle high. True, we hit this. This consequent encroachment of this week does look serious now, right? Like, it really could just be this daily open price. Let's take this off. Less lines. We're still below 50. Oops. We're still below 50% of this daily fair value gap. What gap are people looking at? They're looking at this one. We're way up here now. I still like price to come back down here. What is this? What is this on QQQ? That's the question. Daily QQQ. What is this? 505. Pardon me. Just lots of gaps here. Gap here. That's tapped. Gap here. This was this March? Okay. Yeah, this is Liberation Day drop. All right, we'll see. Right now they crying about the big beautiful bill. Okay, this is this. We failed to close above yesterday's high. Chopping coming, and we will see how UGO earnings affect things. I expect them to beat. Yeah, take this high and then come down here. I do like this level still. I just don't want a whole bunch of tags everywhere. Like, I would buy from this level or sell to this level. Just put level. Target for me is this, but selling above this would be previous week's high. Will be interesting for me. I just don't like time of month, but sometimes it'd be like you be waiting for Tuesday, Wednesday, Thursday, high of the week. And that entry come on a Friday. Crazy. Still looking like higher. So if we hit DOL, wait for sales. If we retrace before hitting DOL, look for buys. Let's go to H1. Alerts are set. Previous week's high for sales. And fair value for buys. So this alert can go because this alert is now right here. It's cleaner. We do got us we're failing to close above this open price, which is interesting. Yeah, target previous week's high is my target. Previous week's high is my target for Thursday. All right, that's that on that. Y'all have a good day. Peace.